The key to reopening and growing economies is to vaccinate your people.
Any discussion about exit from the PEP would be premature.
Washington, the UK, plus the European Union have one thing we absolutely all want to do, and that is to uphold the Belfast Good Friday Agreement.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 11th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The G7 summit gets off to an eventful start. Johnson and Biden put aside their Brexit differences, and a COVID outbreak at a Cornish hotel threatens Angela Merkel's plans to attend. We speak shortly with the former UK Prime Minister Tony Blair. Inflation in the U.S. tops forecast, with consumer prices 5% higher in May than a year prior. Treasury yields dip back below 1.5% as traders digest the data. And international banking regulators propose to classify Bitcoin as the riskiest of assets, spurring further volatility in cryptocurrencies. So, happy Friday, everyone. Let's get back to our top story. And as the UK hosts this year's G7 summit in Cornwall, the Prime Minister Boris Johnson has placed COVID-19, China and climate change at the top of his list of discussion points. Bloomberg has also learned that leaders are set to commit to donating 1 billion vaccines to poorer nations over the next year. Well, after President Joe Biden's arrival in Cornwall last night, we saw a reaffirmation of the U.S. and U.K.'s special relationship.
80 years ago, Prime Minister Winston Churchill and President Franklin Roosevelt signed an agreement known as the Atlantic Charter. It was a statement of first principles, a promise that the United Kingdom and the United States would meet the challenges of their age and they would meet it together. Today, we build on that commitment with a revitalized Atlantic Charter, updated to reaffirm that promise while speaking directly to the key challenges of this century: cybersecurity, emerging technologies, global health, and climate change.
Well, joining us now is a man who spent years developing that special relationship. Tony Blair, founder and executive chairman of the Tony Blair Institute for Global Change and former UK Prime Minister, joins us. I'm delighted about that. So thank you so much for coming on Bloomberg. Mr. Blair, when you look at some of the things that we'll get out of the G7, I want to come back to the UK-US relationship in a second. But how significant is this digital tax?
I think it's obviously important, isn't it, that the President and the Prime Minister come together and agree to work together across a range of issues. Obviously, the test will be in the substance, but yeah, of course, it's an important step.
Mr. Blair, when you look at this, special UK-US relationship, I mean, this was kind of mired in controversy at the start, as we had heard from the Times that there was a démarche of a US official saying that actually the UK should deal with Northern Ireland differently. I mean, do you seen anything like that in your times?
Well, it's a particularly difficult issue because President Biden personally feels very strongly about supporting the Good Friday Agreement. And, when we negotiated that, keeping the open border between North and South in Ireland was extremely important. So obviously that's got the potential to be an extremely difficult problem, a difficult problem principally for the UK and its relationship with Northern Ireland and with the Republic in Europe, but also, of course, it can complicate the American relationship. There are ways through it, by the way. My institute recently published a paper showing how we might be able to align the positions and resolve this question. But yes, of course, it's going to be a difficult issue. But, there are always difficult questions between the President of the United States and the UK Prime Minister. You just got to get over them. And I think the point is that there are huge things that we need to do together right now around global health, around climate change, as the President was saying there, emerging technologies and the relationship with China. So this relationship between the US and the UK, it's strong. It's got very, very deep roots. It'll stay strong.
So what solutions, Mr. Blair, do you see actually on this Northern Ireland impasse?
Well, you're going to have to try and get down to the practical questions of what goods really come from Britain into Northern Ireland and then with the likelihood of going into Europe. I mean, the problem with the border in Northern Ireland, as was always going to be the case, is that once the UK decided that it was going to do a Brexit that involved leaving the single market and the customs union, and that border between North and South in Ireland was going to become the external border of the European Union, and therefore a hard border. And so the frictionless travel and exchange of goods over that border was in principle, therefore, going to come to an end if the UK came out of the Single Market and Customs Union. The way they resolved that through this Northern Ireland Protocol was for Northern Ireland to stay essentially part of that European market system to a large degree, whilst Britain, the mainland, wasn't. So this differentiation between Northern Ireland and the rest of the UK was always going to cause problems. There are practical solutions. I won't get into all the details, but it's a problem that was there from the very beginning. It was inherent in the type of Brexit we did. And the only resolution of it is to try and make sure that you keep Northern Ireland aligned with European regulation insofar as is possible without completely disrupting the relationship between Britain and Northern Ireland.
But so does that mean that the EU needs to show more flexibility, or is it actually a problem that, you know, the UK has to resolve?
It's partly a problem of trust, actually, Francine. I mean, the two sides of, and there's not a lot of that around, and goodwill. So if you work out what are the practical problems here and you really try and solve them, it's possible to solve them. But it's difficult because of the inherent problem of principle.
The G7 is also, we understand, Mr. Blair, combining forces to deal with Russia and China, but also give new life to global COVID-19 vaccines. Will they achieve real change? Are we seeing much more commonality amongst G7 leaders today?
Yes, I think so. And this is the really important thing. The one thing that is absolutely clear is that we have a reason of enlightened self-interest to make sure that the world is vaccinated as fast as possible, not just our own countries. Because the biggest risk that a country like Britain has, or the USA, or any of the major developed countries, is we can vaccinate our own population. But if the disease carries on mutating and you get these variants, and the latest one is this Delta variant that originated in India, those variants that are more difficult to deal with because they're more transmissible, and probably with this Delta variant, you need 2 doses in order to be, in other words, fully vaccinated in order to counter it effectively. If the disease keeps mutating like this in different parts of the world that aren't properly vaccinated, then even the countries like ourselves that are vaccinated are going to have a problem. So that's why, again, we've been saying this for some time, you've got to make sure even this year that you're getting as much vaccine as possible to those developing parts of the world, so that at least they're vaccinating their frontline healthcare workers, their most vulnerable elderly population, and the main urban centers, which is usually in the poorer countries of the world where the disease is spreading. But this is an absolute priority. So next year, we will probably have a world that's got significant amounts of vaccine. The real question is this year, in the second half of this year, how do we act quickly so that we cut down the prospect of new variants emerging?
But do you see a real will of actually making a huge difference? We were talking about some of the numbers. Are they going to be enough to make sure that, a big chunk of the world is actually vaccinated in time?
I mean, if the promises are honoured, it should be possible by the end of 2021 to have vaccinated the most vulnerable elements of the population. Now, I mean, we've actually said over the next 2 weeks, you could vaccinate or get vaccines out for example, the frontline healthcare workers. Because one thing that's really important in these countries is that at least the frontline healthcare workers are protected if the disease starts to surge. Now, my institute does a lot of work in Africa. We have relationships with many governments there. I mean, the amount of vaccine that's been delivered to Africa is very small. Now, it's true at the moment, the amount of disease comparative with the West is also very small. But if that changes because you get the Indian variant coming into Africa, and it is there now, and you get surges in Africa, then those healthcare systems are going to come under pressure very, very fast. So it's necessary to do that. We've also made suggestions, which I hope the G7 deal with, around genomic surveillance, because we've got to be able to pick up new variants much more quickly. And then one final thing that's really important is that many of these countries who are receiving vaccine, some of the poorest countries, it's not just a question of getting the vaccine, it's having the capacity to absorb them and roll them out effectively to the population. And that also needs working on.
Here in the UK, what should the government actually do about the reopening on the 21st? Should they be much more cautious and delay it because of the Delta variation?
Well, the Delta variation is a big problem. But what I've suggested in recent days is that we do what I think is rational, although I understand it's controversial in certain quarters, which is to distinguish between the vaccinated and the unvaccinated. I mean, if you are vaccinated, if you've got the full vaccination, you are much less likely to get the disease, much less likely to transmit it, and much less likely to be hospitalized. Now, if you're balancing restrictions with risk management, it therefore, in my view, makes perfect sense to give those people who are vaccinated greater freedom to travel, greater freedom from restriction. And those people who can't get vaccinated because, for example, if they've got a medical condition, you can make special arrangements for those. But I think it's really important that we try and open up our economy again, because the economic damage is immense. And, you know, in the end, we need international travel to be going again as well. I mean, it's a, you know, and vaccination, okay, of course you can still get the disease even if you're fully vaccinated. But I think that the data, if we published it in the proper way, which is another point, but if we published in the proper way, I think the data would be very, very clear to people, both with Pfizer, which is a messenger RNA vaccine, and with AstraZeneca, which is an adenovirus vaccine. These vaccines work. They're really effective at cutting transmission, disease, and death.
Mr. Blair, we don't at the moment have mandatory vaccinations for our children. Should we have, in light of the pandemic and the turn it's taking?
Well, we should certainly be vaccinating children. I think that's going to be necessary. And again, there's trials that have been done, for example, with Pfizer and 12 to 16-year-olds, I think, which have been positive. Yeah, we will need to do that. I mean, we're going to be in a situation where this disease carries on circulating, mutating for some time. So we're in a long-term management of the virus. And so we need to be dealing with every single aspect of this. And the biggest risk always when you're in a crisis like this is to be able to deal with the immediate problems, but then look at the long-term things you need to put in place. So something else that I think we should really put emphasis on is the development of the antivirals and the biologics that are necessary to be able to cut the severity of the disease if, for example, we get variants that are more resistant to vaccine or completely resistant to vaccine.
Mr. Blair, do you think that Boris Johnson's cut in international aid actually damages the UK?
Yes, I don't think it's a good idea not to do it now at this time. And the US, France, Germany are moving the other direction. Now, look, our commitment to increase aid came out of actually a G7 summit back in 2005 when we put, with America's help, Africa and climate change at the heart of the G7 agenda for the first time. As a result of that, by the way, you've got massive programs of support which have cut the killer diseases in Africa, increased life expectancy, and allowed many of these countries to develop. This is not the right time, in my view, to cut the aid budget. And the aid budget, given the sums of money we're spending on this, it's a small fraction. And, you know, we need to carry on porous parts.
But Mr. Blair, I mean, it's going from 0.7 to 0.5%, and under your government, it was around those levels as well, right? Even 0.4 at times.
Well, we started lower than that. We started at 0.2, but we built it up over time to 0.7. So no, we made a pledge to get to 0.7. We committed to that, and then David Cameron, to be fair, and the Conservatives after us recommitted to that and put it in legislation. Now, you know, I understand by way of the politics of this, don't get me wrong, Francine, I completely understand. There'll be people at home think, yeah, well, it's fine, you know, talk about overseas aid, but we look after people here first. I get it. But right now, at this moment, especially for Britain being on the global stage and taking a leadership position, which is very welcome to see, it's not, I think, given the money we're saving, it's not a sensible thing to do, because we are going to need to help these countries who have been devastated as much by the economic consequences of COVID as the health consequences of COVID. We're going to need to help them get back on their feet.
But you think also, I guess, because of Brexit, then this is also the right time for the UK to be seen more on an international stage? Is that what you're intimating?
Well, I look, even if you hadn't done Brexit, it would still be the wrong thing to do at this moment in time in this pandemic. But yes, I think that the fact of Brexit obviously means that people are watching very carefully to see whether Britain will play a leadership role. And I want us to see us do that, even though I passionately disagree with Brexit. It's happened, it's a fact. And we've got to create the circumstances in which Britain maintains its position as a strong international player working in alliance with others.
Tony Blair, thank you so much, as always, for your time with us. Tony Blair Institute for Global Change founder there, and executive chairman, and former UK Prime Minister. Now, coming up, U.S. consumer prices jumped the most in 13 years. We get into the inflation debate next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, U.S. CPI for May topped estimates, driven largely by categories associated with a broader reopening of the economy as vaccinations bring the pandemic under control. Now, the jump boosted stocks and sent treasuries rallying. The 10-year yield held the drop below 1.5%. Now, it suggests that investors are aligning with the Federal Reserve's view that inflationary pressures are temporary. So let's get straight to Jeremy Stretch, CIBC, head of G10 FX strategy. So, Jeremy, there seems to, first of all, good morning. I don't want to be rude, especially on a Friday, but there seems to be consensus on the markets that actually we will see an uptick in inflation, but just like the Federal Reserve and other central banks have told us, it's going to be transitory.
Yes, absolutely. That seems to be the message that the central banks are consistently telling the market, and the markets are seemingly believing that at the moment and assuming that the base effects that we're seeing will be largely transitory, the supply bottlenecks that will be an obvious outcome in terms of the reopening scenarios will prove to be temporary as well. And so those inflationary expectations will not become ingrained. But I think some of the inflationary dynamics are becoming a little more worrisome. And I think it's quite interesting to watch the Michigan sentiment inflation indicators today, because if you look at the long-term inflation metric or the survey measure, that hasn't been above the 3% threshold since 2011. And already we're seeing some of those other market-based inflation indicators moving higher. So yes, the markets are believing at face value the message from the central banks, but I think there are some signs that the inflation warnings are starting to flash a little more amber. And I think it's important just to remember that warning that was given by Mervyn King, talking about the impact of both fiscal and monetary expansion and the tolerance, it seems, of inflationary pressure. And that could see it become a little more ingrained.
But Jeremy, overall, when you look at the dangers, if we do have the infrastructure plan in the U.S., and it's unclear exactly what shape or form it will take, but if it does go at a pretty substantial level, and the U.S. economy does overheat, where do you see it first? Is it inflation, or is there another indicator?
Well, you're absolutely right to underline the fact that the infrastructure package is part of the overall process. And I think it's interesting that, of course, President Biden's initial interpretation or iteration of that infrastructure package is being gradually whittled away by the politicians on Capitol Hill. So I think, well, ultimately, when we do see something eventually hit the statute book, it will be substantially smaller than perhaps the initial estimates or fears had suggested. So that will limit to an extent the potential inflationary pressure. But I think it is going to be a case of watching the inflation dynamics particularly. And I think also the other important variable is, of course, the Fed are very mindful of the employment backdrop. But in terms of that employment backdrop, we also watch that wage component particularly closely.
Jeremy, what does this all mean for dollar?
Well, I think the dollar is interesting because, of course, we had seen real yields coming under some pressure. And I think if we are going to see those continue to be compromised in terms of those real yields, I think despite the moves that we've been seeing in nominals, I think it's the real yields that ultimately matter. And if those real yields are going to continue to be remaining depressed over the course of the next couple of months as we continue to see these base effects work through, then I think there is a risk that we do see the dollar just drifting a little bit lower. But I think as we go through the summer and then we start to focus a little more directly on the tapering debate, then I think there is an opportunity for the US dollar to start to recover. So I think it is a case that, yes, positioning is quite extreme in terms of dollar shorts. But ultimately, if we are going to see real yields remaining pressured, at least for the short term, then that might just encourage the dollar to remain pressured. But I think it will provide an opportunity later in the summer to start to reload at slightly better levels.
I mean, we've been talking for 4 minutes. We haven't even mentioned the ECB yet. What was your main takeaway from, the press conference of President Lagarde? It seems that, she was really at pains to make sure that the markets understood that for the moment policy is steady.
Absolutely. I mean, the reference steady hand, I'm not quite sure how many times she utilised it in the press briefing, but it was several. And I think you're absolutely right. She was keen to underline the fact that she was trying to maintain an even hand. So on the one side, maintaining that reference to the PEP purchases, but ultimately, when you looked at the changes in terms of the staff forecast for GDP, those were a little firmer than expected, the 0.6% increase in both this year and next, and particularly for this year in the context of the weaker start that we had to the year, does suggest that the ECB are anticipating a pretty strong rebound in the second half of the year. And I think it was also interesting that President Lagarde was able to say the risks to the economic outlook were balanced. And of course, that's the first time she's been able to say that since she's been in situ. So I think she was trying to maintain an even hand. But I think increasingly over the course of the next few weeks and months, we will find that the hawks in the governing council will become a little more vociferous. Be interesting to see what Klaas Knot has to say, for example, today. And as those hawks become a little more vociferous, I think the tapering debate will be really live come the September meeting. And so I think there is some scope for the euro just to pick up a little bit of valuation here. So I wouldn't be surprised if we retest the year-to-date highs. But I think ultimately, if you want to maintain a sort of a bullish euro bias, you probably want to be looking at crosses like euro-yen rather than necessarily euro-dollar over the longer term. And ultimately, if you want to, to benefit from the eurozone recovery even further, then you probably want to look at the higher beta currencies within Europe, such as the Swedish krona, for example.
Jeremy, thanks so much. Jeremy Stretch there, CIBC, head of G10 FX strategy. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. In Cornwall, Boris Johnson and Joe Biden put Brexit tensions aside ahead of the G7 summit. The UK Prime Minister said their talks were wonderful and Biden didn't push him to fix ties with the EU. Emmanuel Macron is, however, holding firm, insisting the EU won't renegotiate the Northern Ireland Protocol. Meanwhile, Prime Minister Boris Johnson is mulling a decision on whether to lift remaining pandemic restrictions. Sources tell us that the surge in UK cases of the Delta variant, first identified in India, makes an extension now likely. The lockdown was set to end on the 21st of June. Johnson faces intense pressure from his own party to reopen the economy, with 78% of UK adults now having received at least one vaccine. And Amazon wants office workers to return at least 3 days a week by September in a more relaxed stance from its previous position of returning to an office-centric culture. The Seattle-based company follows other tech peers in setting a hybrid model to appease employees who have now become used to really working from home. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, the G7 summit kicks off. We're live from Cornwall all day. Of course, some of the conversations that they'll have. Yesterday, we heard from Joe Biden and President Trump that they still have a special relationship. But really, the overall trajectory today is talking about green things, including, for example, a push towards electric vehicle. And the other one, which we were also talking to Tony Blair about, was, of course, the push to have more vaccine doses, especially for the developing world. This is Bloomberg. Now, the G7 summit gets off to an eventful start. Johnson and Biden put aside their Brexit differences, and a COVID outbreak at a Cornish hotel threatens Angela Merkel's plans to attend. Inflation in the U.S. tops forecasts, with consumer prices 5% higher in May than a year prior, while Treasury yields dipped back below 1.5% as traders digested the data. And international banking regulators proposed to classify Bitcoin as a riskiest of assets, spurring further volatility in cryptocurrencies. Well, good morning, everyone. Happy Friday. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 11th of June. Now, straight to our top story, and as the UK hosts this year's G7 summit in Cornwall, Prime Minister Boris Johnson has placed COVID-19, China and climate change at the top of his list of discussion points. Preliminary talks between Johnson and the U.S. President Joe Biden saw them put aside differences on Brexit to reaffirm the special relationship. Well, in Cornwall, at the summit, is Bloomberg's European close anchor. He is Guy Johnson. Guy, always great. This is the only time that I actually get to talk, about work with Guy Johnson. Boris Johnson and Joe Biden met yesterday. What actually came out of it? It was much more friendly than, certainly the press was saying maybe 48 hours ago.
It was extremely friendly, Francine, and I think both leaders really wanted those optics to come through, and I think they got what they wanted. The body language, the narrative, incredibly positive. The meeting that the two leaders had overran. Dominic Raab talking about the fact that was incredibly positive. They had lots to talk about. So the optics really solid for both leaders. Joe Biden is here in Europe. He wants to sort of present this idea that we have moved on from the Trump administration. But EU leaders are going to be gathering later here. Francine, they're going to be arriving kind of late to mid-morning. And their view is that, yes, the leadership in Washington has changed. The real question is, has the objective changed? Is it still America first? Can America be trusted? And I think that's where we're going to see some friction potentially later on. Angela Merkel, Mario Draghi, Emmanuel Macron, they are forming a unit trying to sort of present a unified European approach and European power. These are heavyweight leaders, and they really want to exercise that power here today.
So some Germany security, of course, are self-isolating. This was kind of, definitely made the rounds last night after a COVID outbreak at a hotel near the G7. Is Angela Merkel, Guy, still planning to attend the summit?
Oh, absolutely. So the hotel down behind me in St. Ives, 13 out of the 17 staff at the hotel testing positive. A number of Angela Merkel's security detail were staying there. I would be very surprised. In fact, I know that this is not going to derail her appearance here at this G7. Remember, this is her last G7, and as a result of which, as I was just mentioning it, she wants to use the authority that she has, that Emmanuel Macron has, that Mario Draghi has, really to present a unified and powerful European pitch to the G7, presenting a unified approach, and Angela Merkel will not be dissuaded from showing up here. Her security detail, I'm sure, will be able to find a workaround on this. But it does highlight the security risk that COVID does pose. These summits, I have to say, Francine, we're being tested every day. You have to show that certificate to be able to gain access to the complex. It is taken very seriously.
Yeah, I'm sure it is. As you say, this is the first actually G7 in person, so I'm sure she'll do everything she can not to stay away. We saw this draft announcement, Guy, and it's very much on COVID vaccinations, but also on climate change and helping the poorest nations in tackling this. Do you just see the G7 leaders having much more commonality than in the past?
Well, again, I think it's going to be interesting to see exactly what happens here. The EU has been the largest contributor globally of COVID vaccines, certainly to COVAX, and I think there's a certain sense of frustration that the US leadership has been able to generate all the splashy headlines, has been able to take the headlines. And again, Joe Biden is attempting to do that here. He's coming out with a very big number in terms of what the US is going to be contributing. And as a result of which, I think there's probably going to be some pushback from these European leaders. We're going to be speaking to Charles Michel very soon, the Council President. It'll be interesting to hear what he has to say on this. Certainly, I'll be asking him about this. I think there is a desire from everybody to deliver these vaccines to the rest of the world. And certainly Boris Johnson is determined to lead that. And I think there is the added benefit of this as well, in as much as many of these poorer nations, Francine, are saying, why won't you give us the vaccines when you want us to sign up to your climate pledges? The two need to kind of mesh together. If you can give us this, maybe we can help you out with this. So I think Boris Johnson certainly is very keen to pursue that ahead of the COP meeting in Glasgow later this year.
Guy, thank you so much. Bloomberg's European close anchor, Guy Johnson, there in Cornwall at the G7. I have to say, looking very dapper, very Cornwall chic guy. Now, Blackstone president and COO John Gray says it's still a pretty good time for real estate. Gray gives his insights on the booming property market on the first episode of Bloomberg Wealth with David Rubenstein.
There are a couple of ways. One is there's a public REIT market where you can invest in some excellent companies here in the United States. There are REITs, frankly, around the world. That's one way to do it. Another way to do it today is we have things called private REITs. We at Blackstone have a vehicle called BREIT, which today owns primarily logistics and rental apartments across the southeast and southwest of the United States. It is a product that we're very proud of because historically people did not do a great job offering private real estate to individual investors, and we've really focused on trying to deliver a first-class product and done by our people in the right way. And that's another way to do it. There are others who offer similar products. For some who are more adventurous, they can partner with local developers, let's say. The challenge I worry about that is just misalignment of interests and liquidity. How do you get out at some point, investing, and you're generally not getting a lot of diversity in that approach.
Well, are you worried about the economy now? The economy's been pretty good, but it probably will head down at some point. The economy is always correct. So if I say I want to invest in real estate, is now a good time, or should I wait a while before the economy corrects?
I think it's still a pretty good time for real estate, and I'd say it for a couple reasons. One is the warning signs for real estate are twofold: too much leverage, too much capital, and we don't really have that in the real estate system today. The other, too many cranes, too much building, and we're actually below historic levels in terms of new supply. The other thing I'd point out, if you looked at the S&P 500, it's delivered something like 4 times the return of public REITs since the beginning of 20, before COVID. So real estate is lagging coming out of the recovery because obviously people have been concerned about the physical world. I think real estate here, as the economy reopens, people go back into spaces, is going to see a little bit of a bounce. I think the risk is, do interest rates move a lot? That's a bit of a threat. I would say one positive thing about real estate also is inflation, remember, drives up the replacement cost of buildings. And that gives you a little bit of a cushion on existing real estate.
Well, that was the Blackstone president and COO John Gray speaking with Carlyle co-founder David Rubenstein for a new series called Bloomberg Wealth. Now, you'll be able to see more from this interview on July 6th at 9 p.m. in New York when Bloomberg Wealth with David Rubenstein debuts globally. And on June 23rd, we'll also be speaking with Stephen Schwartzman, BlackRock CEO and co-founder at the Qatar Economic Forum. We'll be discussing leadership in a post-pandemic world, so don't miss that conversation. But coming up, we hear from Tina Lee, Deutsche Bank CEO for UK and Ireland, on the importance of identifying and nurturing talent. That's part of our Money and Equality special. This is Bloomberg.
I think we're pretty good at hiring, particularly at the junior level. Every institution tries incredibly hard to get a good gender balance at the intern level and at the graduate level. I think the real challenge is what happens once they get into an organization. And certainly what we see, and I think it's aligned actually across the industry, is we lose women at every corporate title. Yeah. It's not necessarily because they're leaving to have children. They leave at VP, they leave at director, they leave at managing director, so that by the end, you're left with a relatively small cohort versus what you started with. So I think as an industry, we have to do much better in terms of not only identifying talent, but most importantly, nurturing talent at those critical phases, and particularly at the VP level, where there are hundreds of VPs. Thousands of VPs, and how do you make sure that you've identified and nurtured that talent and give them the right voice?
Well, that was Tina Lee, Deutsche Bank's CEO for UK and Ireland, talking about the importance of hiring and retaining female talent. Now, I spoke to Tina Lee alongside Julia Hoggett, Chief Executive Officer of the London Stock Exchange, as part of a new Voices London panel on creating an inclusive environment, nurturing talent, and the future of work. And you can watch that full conversation on Bloomberg TV this weekend with a half-an-hour special, which airs at 2:30 p.m. UK time on Saturday. It's really a good one, so Don't miss it. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Chinese ride-hailing company Didi revealed a $1.6 billion net loss for 2020 as it filed for an IPO in the U.S. The sale will be led by Goldman, Morgan Stanley and JP Morgan. It may seek a valuation of as much as $70 billion to $100 billion. The company has been trading at a valuation of around $95 billion in the private market, according to Bloomberg sources. Now, AMC gave its retail shareholders popcorn. In turn, it gave the movie theatre chain a path to stability. Its meme stock status has led to a credit upgrade from S&P. The company cashed in on share price gains to rise about $1.25 billion through equity offerings. That, combined with the improving outlook for movies, moved S&P to upgrade AMC's rating to CCC+ from a CCC-. Despite the upgrade, the company is still deep in junk territory. And Tesla CEO Elon Musk showed off his Model S Plaid, the electric car maker's quickest vehicle to date, at an event for customers at the company's factory in Fremont, California. The phrase Plaid mode is a reference to the 1987 comedy movie Spaceballs by Mel Brooks.
Why make this really fast car that's crazy fast and everything? And I think there is something that's quite important to the future of sustainable energy, which is that we got to show that an electric car is the best car, hands down.
And that's your Bloomberg Business Flash. Francine.
Yeah, and thanks so much. Now, U.S. CPI for May topped estimates, driven largely by categories associated with a broader reopening of the economy as vaccinations bring the pandemic under control. Now, the jump boosted stocks and sent treasuries rallying. The 10-year yield held the drop below 1.5%, suggesting investors are aligning with the Fed's view that higher prices are temporary. But for the emerging markets, rising inflation is a good thing. My next guest says the EM assets do best in high inflation, high growth scenarios. Well, she adds that the world is entering such an environment now. Joining us now is Marie-Thérèse Barton, Pictet Asset Management Head of Emerging Debt. Marie-Thérèse, thank you so much. I couldn't be happier to have you, especially on a day where we talk about inflation and the day of the G7. What's the environment like for emerging markets right now? If the Fed and the markets are right, and it seems that they're getting aligned more and more, we'll see inflation, but it's transitory. What emerging markets can take advantage of that?
Great question. We feel that potentially the narrative for emerging markets, it's about to turn a lot more positive as we enter into H2 and as we enter into the later summer months. I think key for us here, in fact, is the real yield differential that we're seeing. For most EM central banks, they've actually taken a pivot to hiking cycles. And in the absence of a real change from developed central banks or seen a pivot, EM central banks are hiking interest rates. We've got Russia and the central bank meeting today. We've got Brazil next week where we're expecting interest rate hikes. So we think overall this is going to be providing a real support to local assets. At the same time, we're seeing a pickup of inflows into EM. 3 weeks of inflows into EM hard currency debt, pickup of inflows into local currency debt in the last week, while we're expecting to see the EM-DM growth differentials start to improve as we go into the latter part of the year, and of course linked to better vaccine deployment and rollout that we see in EM, which of course is headlines today with the G7 announcement.
So, Marie-Thérèse, I know you're focusing quite a lot on Latin America. I mean, of course, I imagine that Brazil is very different to an Uruguay and other country. Where do you see the biggest investment opportunity for markets?
Latin America is a really interesting area at the moment, particularly when we're thinking about the impact of COVID, in particular on the impact of social environment and the shift to left-wing policies that we're seeing, Peru being a case in point, but also what we've seen in potentially Colombia with a rise in social tensions and also in Chile as well. But overall, at this juncture, in this backdrop with global reflationary opening up trade, recovery trade, commodity prices. We feel this is a strong environment for Latin America, and thinking about Brazil, thinking about high carry currencies, that's including Brazilian real, Mexican peso, providing interesting opportunities. And particularly in the high yield space, actually seeing the opportunity in LATAM for the high yield names to be compressing versus US high yield. We think that's an attractive proposition over these summer months.
Marie-Therese, when you look at some of the things that we've been talking about that leaders will decide on, which is climate change and of course COVID-19 vaccinations, do the two go hand in hand, and does that also impact, I guess, is it the countries that get vaccinated quicker that you want to be invested in, or does that mean that you see less opportunity because it's already priced in?
It's a very interesting question. We're doing a lot of work looking at vaccine deployment, looking at five-day changes in COVID cases, and seeing how that is linked to growth expectations and ultimately how we think the assets will be performing. So it's something we're watching very closely. So, for example, in the last few weeks, we've seen first dosage of vaccinations pick up in Brazil, also Mexico, feeding into this more positive narrative in China as well, but potentially more disappointment in India and South Africa vaccine rollout. So where we expect vaccine deployment to be by late summer, which would be at 50% in Brazil and Mexico, we would want to be thinking about that in terms of how to be pricing that into the market, and would definitely be feeding into our more positive narrative for those markets.
Marie-Therese, I know, we need to talk a little bit about commodities, given some of these, a lot of these emerging markets are linked to commodities. What's happening in commodities right now? It's not really the super cycle that we've seen in the past.
No, not yet, some people may say, but I think this kind of this greening of the economy is a really interesting aspect, and the rebalancing of China growth, focusing on domestic demand as well, and what that will mean for demand for commodities, and which will potentially be benefiting for the LATAM market. So potentially not a super cycle, but certainly a tailwind that we can think about for emerging markets at this juncture, and in particular some of the LATAM markets that we're focusing on.
Thank you so much for joining us, Marie-Therese Barton there, Pictet Asset Management Head of Emerging Debt. Now, coming up, Bitcoin could soon be classified as the riskiest of financial assets, dragging it, kicking into the mainstream. We'll have the details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bitcoin could soon be classified as the riskiest of financial assets, dragging it further into mainstream. It would also make it extremely costly for banks to hold digital tokens on their balance sheets. Well, joining us now is MLive's Eddie van der Walt, the great student of everything crypto and Bitcoin. Eddie, if you look at these new rules, so first of all, does Bitcoin want to be dragged more into mainstream, right? Because then, I guess, almost automatically the price of it goes up, or is it something that means extra regulatory scrutiny?
Oh, wow. I love how you positioned that question, because, yes, this is what is happening to Bitcoin, right? It is being brought into the mainstream, and there are, and this opens it up to a new class of investor that didn't have access before. But there are many out there that will say, look, we kind of like the fact that it's on a, in a parallel universe, on a parallel system, that it is the Wild West, that we can speculate without anybody telling us what to do. But this increased regulation does bring with it the opportunity for banks, for pension funds, for institutional investors to take positions in it. And that brings more money into the space. And I in the short term, yes, it will hurt Bitcoin, because there's going to be people that say, well, look, what I have done in the past, I won't be able to do in the future. But I think ultimately, if you tell the banks, listen, this is the most risky asset class, you can only hold this smaller percentage on your balance sheet. There will be some banks out there that will say, actually, that means I can hold some Bitcoin on my balance sheet. You see what I mean? So I think for some in the crypto community, this might be a negative, but I think ultimately in the long run, and I'm scooping myself a little bit because I'm going to write this on Monday, but I think ultimately this is what is happening, that it is a positive in the long run for Bitcoin.
I like that. Auto scooping is allowed. Scooping, colleagues is not. So what's the likely longer term effect on Bitcoin? Like, when do we find out exactly what happens because of this extra scrutiny?
Look, I worry. So this is not, it's not a short-term trend, and there seems to be, from the U.S., from China, from the BIS, from everywhere, there seems to be increased scrutiny. And in the short term, in the medium term, even that could be a negative. I feel there's just a risk that we are entering another crypto winter, like we saw after 2017, like we saw after 2012. That there will just be a period in which Bitcoin is not that exciting. Right, and we may even see more drawdowns. But I think ultimately mainstream adoption is needed for this for this asset class to take on the world in the way that it promises to.
Eddie, thank you so much. As always, Eddie van der Waalt there from our MLive team. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz out of New York. We'll have a full roundup of the markets. Now, the markets will also take, of course, their cue from what's happening in the G7. We have our very own Guy Johnson with a very important interview, Charles Michel's. That's coming up in the next couple of minutes. We'll get the lowdown on what it means for vaccinations. Yesterday, we heard from President Biden about this special relationship, of course, between the UK and the U.S. The G7 today seems to be combining forces to deal with Russia and China, but also give a new life to some of these COVID-19 vaccination goals. Will they achieve what they want to? What does it mean in terms of the Delta variant? And of course, what does it mean for climate change goals? We have you covered for the G7. We also have you covered on extra market analysis on inflation. This is Bloomberg.
The key to reopening and growing economies is to vaccinate your people.
This has to be a big wake-up call. I mean, we have to work together as a global community. Viruses do not respect borders.
This task force is going to be important. It's only a first step, but we still have an opportunity to save the summer.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning, everyone. 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York on this Friday, June 11th. And our top stories today. As the G7 summit gets off to an eventful start, European Council President Charles Michel joins us live from Cornwall for his first ever interview with Bloomberg. ECB President Christine Lagarde remains sanguine on inflation while the Federal Reserve contends with rising price pressures. And international banking regulators propose to classify Bitcoin as the riskiest of assets, spurring further volatility in cryptocurrencies. So there's quite a lot going on. We're expecting the G7, after President Biden met with Prime Minister Boris Johnson today, to focus really on vaccinations, on how to deal with China and Russia, and of course, on climate change. Kailey, how's it all playing out on the markets?
Well, the market is trying to decide whether or not it thinks that upside surprise on CPI yesterday meant anything at all. And what it seems like is it's decided it believes the Fed and it is indeed transitory. What we saw in the Asian session was a bit of a mixed picture. You saw Chinese equities actually the ones that really underperformed. The CSI 300 down about 0.9%. Hong Kong stocks were higher, though, as was the Kospi in South Korea. And speaking of South Korean assets, I wanted to point out their 3-year bond yield up at 1.3% or so, which is actually the highest level going all the way back to February of 2020. And that is after the Bank of Korea governor signaled the need to normalize policy. In foreign exchange, I also wanted to point out what's going on with emerging market currencies climbing to an intraday record high. As for what the picture looks like here in the U.S., we saw stocks rise to a record high and bond yields fall even after CPI rose more than expected in the data we got yesterday. This morning, not a ton of movement. We are seeing futures inch higher, up about 2.5 points on S&P E-minis. In the Treasury market, we're holding right around that 1.43% level, which is the lowest since March. A lot of what we've seen this week, which has been the biggest decline for yields on a weekly basis in about a year, has to do with short positions unwinding. A little little bit of a squeeze going on. The dollar essentially flat on the day after earlier weakness. And then, of course, Francine mentioned Bitcoin. It's trading right around $37,000. Is banking regulators making it more costly for banks to hold it on its balance sheet a good thing or a bad thing? That is exactly what the market is trying to figure out, Matt.
Yeah, that's a very good question, because on the one hand, they're going to be less likely to want to hold it if it costs more. On the other hand, now that they know the official regulations, the rules are in place, and they can move forward. Fran, we're looking at gains across Europe today, especially in the UK, especially on the Iberian Peninsula. Take a look at the Stock 600 and you'll see that it is up. The interesting moves to me really are in rates as the U.S. bounces back a little bit in terms of the 10-year. We see bunds coming back down. We see gilts coming back down in terms of rates. In fact, wherever you look across Europe, you see rates falling. So investors are buying those bonds. And then Deutsche Bank, yesterday warning of a $360 million hit, but that had to be priced in during the session. This morning, we got a report out from Reuters that the ECB is pressuring Deutsche Bank to name a new chairman. Paul Achleitner retires next year, but the ECB wants to know now who it'll be so they have time to vet the candidate.
Yeah, one of our biggest stories, actually, and of course, what that means for the German banking landscape. Now, Matt, this is what else we're looking at today. Now, there's quite a lot going on. Of course, it's all about the G7. Apart from the G7, there's the Bank of Russia, the latest central bank to release its rate decision. That's at 6:30 a.m. New York time. At 1:30 p.m., we'll get the Baker Hughes U.S. rig count. It's a great indication of what the price of oil could do. And then, as we were saying, the G7 Leaders Summit kicks off today in Cornwall after President Biden met with Prime Minister Johnson yesterday. High on the agenda will be the Global Tax Pact, the pandemic, China, and of course, climate change. So for more on this, let's get straight to Cornwall and to our very own Guy Johnson on the ground at the summit in Cornwall with a Bloomberg first. Guy, over to you.
Francine, thank you very much indeed. One of the huge focuses of this G7 summit is what is happening with vaccine distribution. The EU has led in this process of delivering vaccines to the rest of the world. I'm joined now by Charles Michel. He is, of course, the president of the European Council. The Council obviously is the coordinating body for the EU 27 leaders, has a significant foreign policy role as well. So we'll be able to touch on many of the subjects that are being addressed here at the G7. Mr. President, thank you very much indeed for your time today. Let's start off with vaccines, because it does seem to be at the centre of what we're going to be dealing with here at the G7. The EU has delivered the most vaccines to the rest of the world. It has been a huge exporter of vaccines. I'd be curious to know what the latest number is. Yet the President of the United States comes here and once again delivers a headline that takes kind of really everybody's attention. Is that a source of frustration for you?
No, on the contrary, we are very pleased to be joined by the United States, and you are right, we took very important decisions because we understood immediately that it's a global challenge, and that's why we took the decision to export vaccines that were produced in Europe, and right now we have already exported 350 doses to the rest of the world, and we took the decision 2 weeks ago to donate at least 100 million doses by the end of this year, and in fact, probably we will donate more doses because we will continue to coordinate with all the member states. But the most important, in my opinion, is the cooperation and the coordination among the G7 countries in order to be convinced that we need to donate vaccines and to make sure that the vaccines are accessible everywhere.
Do you think delivering vaccines to the rest of the world allows other things to happen? There is a conversation that I often hear talking about the idea that many poorer countries struggle to deliver on climate and the proposals that are being made by the G7 and other bodies. We're looking forward to COP taking place in Glasgow later this year. Is it critical that vaccines are delivered so these countries can also deliver on other aspects of what the world needs them to do, i.e. deliver on the climate promises?
The first priority, of course, is to defeat COVID-19. This is the first priority, and we want to be safe until everyone is safe. It's very clear, point one. But there are many links between the different topics. Take the economic recovery, for example. The first economic measure is to make sure that vaccines will be accessible everywhere, point one. And point two, climate change is a huge and a very important challenge. And Europe played a very important role. And I remember a few years ago when the United States, with the previous administration were reluctant to consider climate change as a top priority. We took fundamental decisions. We decided 18 months ago to make Europe climate neutral by 2050. This is a very strong ambition. We decided to implement what we call the European Green Deal. It means that we want to open some political debates at the international level. The carbon pricing, for example, or another important topic is the support, the financing support for the developing countries.
I want to come back to climate a little bit later in the conversation and talk more in detail about what is happening here. But first I want to address one of the other subjects that is likely to dominate the agenda, and that is China. The United States, President Biden, is looking for the G7 to adopt a robust stance towards China. You talked about China being a potential systemic adversary yesterday. Can you just define what potential means and what systemic means?
Because we observe that there is a lack of reciprocity at the economic level. We are observing also unacceptable trade practices by China. These are very concrete examples. But we have a clear vision in Europe what we want with China. First, we don't paper over the human rights, the Uyghurs in China, the situation, or the situation in Hong Kong, for example. And we are very clear, and we took very clear and strong decisions against China because of this behavior that we don't accept. Second, we think we need to engage with China on some global topics, COVID-19, health. These are topics for which a dialogue is useful and necessary, with China included. And three, we want to rebalance the economic relationships. We are observing indeed that the Chinese companies, they don't have the same model. This is not the same situation like in Europe or in the United States. This is another economic model. This is another political model. Yep. We want to engage in order to promote our values, to defend our interests. We don't want to be naive, and we think that this cooperation and the very strong ties between the United States, Europe, and the other like-minded partners is key in order to have more influence and to try to push China in a more positive behavior.
Do you think that the trade deal that you were behind was a mistake, therefore?
No, certainly not. This was an important step in the right direction because for the first time, China took very important commitments. Of course, we need to make sure that they will implement the commitments that they made. I'll give you one concrete example. For the first time, China took some commitments at the social level. This is for us very important. We want to make sure that we can fight against the forced work or the forced labor, for example. This was an important priority.
But you talk about being a potential systemic rival. Potential, I just want to... You are not convinced yet that China is a rival?
We are convinced that China has a strong international ambition. We have also seen how China has tried to take the place that was not occupied anymore by the United States the last year when Donald Trump took the decision to be less engaged in the multilateral model. And that's why we are not naive, I repeat, but we want to make sure that we can be efficient when it comes to the promotion of our values and the defense of our interests. We think also this is important not only to react, but also to act and to have a more proactive strategy at the international level.
You had a long phone call with Vladimir Putin last week. The President of the United States is going to be speaking with him next week. What advice would you give following your phone call with Vladimir Putin to President Biden?
I don't give any advice to the President of the United States. He has a huge international experience. But indeed, this will be an important moment, this meeting between Vladimir Putin and Joe Biden. And today or tomorrow, we'll have the opportunity with Joe Biden to prepare the way we will work together when it comes to the relationships between Europe, the United States, and some authoritarian regimes. We spoke about China. This is the same for Russia. We don't accept the disruptive activities by Russia, the illegal actions by Russia. We stand firm in order to protect the eastern borders of Europe. And I think that this meeting could be important in order for Vladimir Putin and Joe Biden to clarify what are the important principles, what are the important positions, to try to understand if it's possible or not to improve, being very realistic, the relationships between Russia and some other countries in the world.
Will Nord Stream 2 be completed and become operational?
This is a decision taken many years ago, and you know that this is a regular debate around the table of the European Council. This is not a secret. There are different opinions around the table of the European Council, and we'll certainly have again the opportunity to discuss this topic with some American friends.
Okay. I mentioned we should talk about climate, so let's just do that as we wrap the conversation up. Is it possible to put the United States and Europe into a position where they can have coordinated policies towards climate change without the United States having a carbon price?
This is an absolute priority because we understand that this is the big economic transition of this century, and it's important to make this climate crisis an opportunity for the world, for the growth in the world. But it means that we need to take fundamental decisions, and the question of the carbon pricing is a very important topic. And we have decided in Europe to put very high on the international agenda this topic, because we need some common standards. If we want to be able to reach our goals, our common goals, we need to take fundamental decisions. This is paramount if we want collectively to be serious. I understand also that we need to take into consideration the social transitions for the economic sectors that could be affected by the decisions that we intend to take, and that's why this question of the transition needs certainly a lot of coordination and a lot of cooperation.
Mr. President, thank you very much indeed for your time today. We greatly appreciate you stopping by to talk to us. Charles Michel, the President, Francine, of the European Council. Back to you in London.
Guy, thank you so much. Great work there. And I believe it's also the first interview that the EU actually gives at the G7. Great to get some insights on the relationship that he's expecting the EU to Russia to have, also on a day where Nord Stream 2 is one of the main focuses that we're watching today. I know, Matt, that was definitely on your radar. We'll have plenty more on that. And then coming up, I think we look at risky assets. But Matt, if you look at the Nord Stream 2, we're getting some tests today, and it'll be interesting to see how the EU handles Russia.
Yeah, interesting to see. You know, the EU, in a sense, is on the back foot here because the U.S. wants to deal with China in a more aggressive way. The EU wants to make deals with China. The U.S. wants to really stop Putin in a more aggressive way, and the EU is making a great big deal with Putin. So it's interesting when you've got this geopolitical friction. On the one hand, you've got the US against these other global players, while the EU is engaged in very serious commerce with them. So I'll be excited to watch how this works out.
Yeah, coming up, risky asset, the latest classification proposal from banking regulators spurring more volatility for cryptos. And then later this hour, Jari Stehn, Goldman Sachs chief European economist. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, we got yesterday this inflation data out of the U.S. that everyone seemed to want to see. It was very widely watched. It was very important, but it didn't seem to make much of a difference in terms of the markets. Check this out. We welcome every day this hour our Bloomberg radio listeners on London DAB Digital. You can't see this chart, so I'll just tell you what it says. CPI, and this is the core at the highest level that we've seen since all the way back in 1992. I was enrolled as a freshman at Denison University that year. I didn't really do very much at school, but prices were rising at the same pace, and it hasn't been since, well, I guess that was almost 30 years ago now that we've seen this level of inflation, and yet the markets still bought stocks and the markets still bought bonds. Eddie Vanderwalt, Bloomberg MLive editor, joins us now to talk about this. Really, it was the 10-year yield, Eddie, that surprised me the most, dropping down to 146, even though inflation beat the forecast. What gives?
Absolutely. I read John Author's earlier today, which everybody should every day anyway, but he was talking about how much optimism is in this market and how much money is riding on the fact that inflation is going to be transitory. Because as you say, inflation really high, bond yields really low, and at the same time stocks, just powering on. So it's really hard to see. It's not hard to see, but if the market is wrong about this, that the fact that all of this is transitory, then we're in for a major correction here.
But Eddie, if the markets, if central banks say one thing and the markets actually agree with them, is it dangerous because it's groupthink, or actually does it pretty much validate what the central banks have been saying all along?
Look, I think the central banks are winning at the moment. The central banks are they're winning the argument on the on the debate of whether or not inflation is transitory. But if we do start to see wage inflation picking up, then I think it's going to be difficult for them, and we've already seen some of that. But I think the job market is going to be absolutely telling, and not the bottom line jobs figure, the wage inflation. I think that's where we'll be really focused on for the next few months.
Eddie, quickly on crypto, banking regulators proposing classifying Bitcoin as the riskiest of assets. Is that a good thing or a bad thing for the crypto market?
Kailey, I absolutely think it's a good thing in the long run. I think if you tell people this is a risky asset class, you can only buy so much of it, then there are going to be some people that say, oh, hang on a minute, I can buy so much of it. So I think I think this opens it up to a whole new investor class. Regulation ultimately is needed in this space because it brings more investors to it.
Eddie, thanks so much. As always, Eddie Vanderwalt, their Bloomberg MLive editor. Now, coming up a little bit later today, we'll also speak with the chief executive of Bitcoin mining company Riot Blockchain. He's Jason Les. That's at 1:30 p.m. in New York, 6:30 p.m. in London, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, a prominent Harvard Medical School professor has resigned from the U.S. FDA advisory panel over the agency's decision to approve Biogen's Alzheimer's drug, Aduhelm. Now, Dr. Aaron Kesselheim is the third person to quit over the clearance, which he called probably the worst drug approval decision in recent U.S. history. Now, two big clinical trials produced conflicting results on whether the drug could slow cognitive decline. And this is something I know, Matt, that you were extremely passionate about right from the beginning, the approval actually, when we got it on Monday, because there was a lot of people saying this should have never happened.
Well, and Max Neeson from our Bloomberg opinion team pointed out that one of the studies Biogen did failed, and the successful study only showed a 22% reduction in cognitive decline. So even that doesn't seem fantastic. And the concern to me is that it magnetizes R&D dollars to the wrong process, what could be the wrong process.
Yeah, we'll have plenty more on that, maybe with Arsene Fazeli a little bit later. Coming up, Jari Stehn, Goldman Sachs chief European economist. We'll talk, of course, about the ECB and the press conference of Christine Lagarde yesterday. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Matt, a lot of the focus, of course, is on the inflation number we had yesterday, but today we also turn to the G7 in Cornwall and see what they can come up with in terms of vaccinating the developing world, climate change, and, of course, how to deal with Russia and China. It's lovely, especially when it's sunny.
Yesterday looked gorgeous. I mean, it was only 60 degrees and change in Fahrenheit, of course, but absolutely a nice place. The weather not as inviting today, and maybe the meetings are going to be a little bit more difficult today as well, because as you say, they've got to deal with Russia, they've got to deal with China, and we just heard from Charles Michel with Guy Johnson saying that Europe wants to do a deal with China. They've already got a trade agreement that they like, and Europe wants to buy gas from Vladimir Putin and Russia. So they're working closely together with Russia in a commercial way. Maybe those interests aren't exactly aligned with U.S. interests.
All right. On a lighter note, I think they're having turbot for dinner and then a barbecue on the beach. I was sent the menus.
It's always
Guy
turbot.
Johnson, of course. It's always turbot, served by the U.K. It probably has something with fishing rights with the EU. Kailey, the market's not looking at the menus, but looking at inflation.
Not looking at the menus, looking at inflation and deciding that they believe central bankers that it is indeed transitory. We saw that evident yesterday in record highs for U.S. equities and bond yields moving lower. And those record highs are continuing today. In Europe as well, the Stoxx 600 climbing 0.4% to an all-time high. And here in the U.S., futures aren't moving too much. We're only up 2 points on S&P E-minis, but again, that would indicate a record open in about 4 hours' time. In the Treasury market, we're going nowhere this morning, but we are down around that 1.43% level, the lowest since March, heading for the worst, biggest weekly decline in Treasury yields in a year. And then the dollar was weaker earlier, but now it is broadly stronger in the G10 space. As for some stocks moving before the opening bell, I, of course, have to start with a meme stock. AMC, it's fallen about 24% in the last 2 days, but then S&P Global Ratings raised its rating on the company to CCC positive from CCC negative, that aiding sentiment with the stock up the better part of 3%. And, of course, GameStop is one of the other OG poster children of the meme stock phenomenon. It fell 27% yesterday after its quarterly earnings report. Today, though, a little bit of a rebound, up about 5%. Two stocks moving to the downside, I wanted to mention, one of them being Vertex, the pharma company. It is halting the development for a closely watched therapy for liver disease. That has the shares down 11%. And CureVac, the COVID-19 vaccine maker, is down more than 6% of those ADRs after a report that Germany, Matt, your Germany, is dropping it from its vaccination campaign.
Not just my Germany, CureVac, based in my alma mater town of Tübingen, where I finally finished my university years in Tübingen. That's where CureVac's headquarters are. I've got a great chart, speaking of Germany, put together by my erstwhile producer, Hillary Clark, on the Bundesbank's forecast. Just coming out this morning, it looks hot. They expect a return to pre-pandemic growth by the end of this year. They expect growth of more than 5% in 2022. By the way, these were pink and green. We've got a regular viewer, Olivia, who doesn't understand pink and green. So we made them pink and blue for her. And then in yellow, you see growth kind of calms down to the 3% level in 2023. But it looks strong, and the Bundesbank doesn't see inflation as a real problem, Francine. This year, 2.6%, but that comes down below 2% for the following couple of years in the forecast.
Yeah, and really everything in the markets right now depends on what inflation does and expectations. Now, European Central Bank has renewed its pledge to maintain faster emergency bond buying. The ECB President Christine Lagarde spoke yesterday at a news conference.
We expect economic activity to accelerate in the second half of this year as further containment measures are lifted. Uncertainties remain as the near-term economic outlook continues to depend on the course of the pandemic and how the economy responds after reopening. Our new staff projections point to a gradual increase in underlying inflation pressures. The Governing Council expects net purchases under the PEP over the coming quarter to continue to be conducted at a significantly higher pace than during the first months of the year. We see the risks surrounding the euro area growth outlook as broadly balanced. Any discussion about exit from the PEP, as you just mentioned, would be premature, it's too early, and it will come in due course. But certainly, for the moment, it's too early and premature, as simple as that.
Well, joining us now is Jari Stehn. He is Chief European Economist at Goldman Sachs. Jari, thank you so much for joining us. So it does seem that the recovery in Europe is pretty strong. We should have the first disbursements of the recovery fund, I think, in the coming weeks for certain countries. Are you worried about inflation, or does the ECB actually have bigger problems than inflation?
Yeah, I mean, first of all, we agree on the strong growth prospects. We think the incoming information is very encouraging. On the medical side, on the data side, in terms of the reopening, and we see very strong growth into the summer across the euro area. Now, on inflation, we are, of course, seeing upward pressure. We think that some of the inflation metrics will continue to move up over the next 6 months. So we think German headline inflation, probably the most eye-catching here, will reach 4% in November, but we think it will be transitory. We think that inflation will slow again into 22 as some technical factors unwind, and as underlying inflation is still subdued because there's still a lot of slack out there. And so we think the medium-term inflation outlook remains pretty subdued, and share the ECB's assessment on that front.
So, Jari, when are you expecting a change in policy from the ECB? I mean, if you listen to Christine Lagarde, she was really at pains in saying, like, look, steady as they go for the moment, we're not doing anything. How soon could a shift, even in terms of the PEP, and the bond buying slowing down, how soon could that come?
Yeah, so they pledged to maintain that significantly higher pace in Q3. We think they will end up buying a little less in Q3 than in Q2 on the back of seasonal issues. I think that was well flagged yesterday. And we then think the September meeting is going to be quite eventful. We think they will agree on a step down in the PEP pace in September for the fourth quarter, given an improving outlook. But we also think they will conclude the strategy review in September, come up with a 2% symmetric aim for inflation, and use that to enhance the forward guidance. And so we don't think they will hike anytime soon. We have them on hold until 2025 to make sure that they provide enough support to the economy well into the recovery.
Jari, how much longer are they going to stay close to but less than 2%? Is that phrase going to change?
Yes, we think so. We think they will go to a 2% symmetric aim over the medium term. So that would be a slight shift up from the current formulation. It would clearly be quite a lot simpler. And we think there's a lot of support for that switch. If you look at recent comments across the Governing Council, I think we see that most people are on board with that switch. Now, we do think it's going to be paired with putting somewhat more weight on housing costs in the inflation assessment. Owner-occupied housing costs in Europe are not reflected as in other countries. And so we think the combination of that is actually going to be a bit of a wash as far as the policy outlook goes, because you're on the one hand going to 2% symmetric, raising the inflation target a little bit, but by including housing, you also raise the measured amount of inflation. So we think the key really is the strategy and the forward guidance, as I just said.
I wonder also about the importance of monetary policy, the weight of that importance. We see the paradigm shift very clearly in the U.S. from monetary to fiscal. Here, it's a little bit more blurred. Do you expect monetary policy to continue to carry the same weight?
Yeah, you're right, of course, that the shifts have been bigger in the US. We have seen much more fiscal stimulus in the US, but I would also say that we have seen a significant shift in Europe too. We did have a big expansion of national measures during COVID, and of course now the recovery fund is about to start, which we think will be very helpful in supporting growth in the south of Europe. So I do think there's been a shift. But given how much slack there is in the euro area and given how low underlying inflation pressures are, we think the ECB needs to be on hold here and provide a lot of support for quite some time to come.
Jari, be it because of fiscal stimulus or just a better vaccination rollout here in the U.S., where I speak to you from, we are ahead of Europe when it comes to growth. Europe obviously is catching up now, but at what point is growth going to peak on the continent?
Yeah, we have the peak in growth in Q3. So, in the U.S., it looks like the peak is going to be earlier than that. And we probably have moved already past the peak in the US in terms of the monthly growth rates, and our US team expects growth to remain strong, but to slow sequentially from here. Whereas in Europe, we are just at the start of that acceleration. We are seeing very encouraging signs in the June survey data, the early signs that we have so far. And we think there's going to be a big step up in growth. So we have about 2% growth in Q2. So this is quarter over quarter, not annualized. So this is a big number. And then it peaks at 3% in the euro area in Q3 in our forecast.
Jari, thank you so much for joining us. Jari Stehn, there, Chief European Economist at Goldman Sachs, talking about everything that we heard from the ECB. Now, on another note, this is something that, of course, the European Central Bank and Francine Lacqua has also been pushing on, money and equality. It's also a new special bringing together senior women in the UK financial industry to discuss how the industry's post-pandemic future, the risks and opportunities for both women in organizations. Now, Tina Lee, the Chief Executive Officer of Deutsche Bank for the UK, is one of the leaders I spoke with. And here's what she said about hiring and retaining female talent.
I think we're pretty good at hiring, particularly at the junior level. Every institution tries incredibly hard to get a good gender balance at the intern level and at the graduate level. I think the real challenge is what happens once they get into an organisation. And certainly what we see, and I think it's aligned actually across the industry, is we lose women at every corporate title. Yeah. It's not necessarily because they're leaving to have children. They leave at VP, they leave at director, they leave at managing director, so that by the end, you're left with a relatively small cohort versus what you started with. So I think as an industry, we have to do much better in terms of not only identifying talent, but most importantly, nurturing talent at those critical phases, and particularly at the VP level, where there are hundreds of VPs, thousands of VPs. And how do you make sure that you've identified and nurtured that talent and give them the right voice?
Well, that was Tina Lee, Deutsche Bank's Chief Executive Officer for the UK and Ireland, and you can watch the full conversation on Bloomberg TV this weekend with a half-an-hour special airing at 2:30 p.m. UK time on Saturday. I have to say at times it was actually quite emotional hearing some of these senior leaders talking about how they started out. Coming up, if it's Tesla's fastest car yet, we'll discuss the Model S Plaid, which can reach 60 miles per hour in less than 2 seconds. That's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, the CEO of Tesla, Elon Musk, showed off the Model S Plaid edition, the electric car that is its quickest vehicle to date. Musk rolled out the car at an event yesterday in Fremont, California.
Why make this really fast car that's crazy fast and everything? And I think there is something that's quite important to the future of sustainable energy, which is that we've got to show that an electric car is the best car, hands down.
Craig Trudell, Bloomberg Europe Autos editor, joins us now. He runs our coverage for us in the region, no big deal. Craig, I just want to clarify one point. Now, I think this is very cool, and I agree with almost everything Elon Musk said, but the car does not reach 60 miles an hour from a stop in 2 seconds. They give it a rolling start of about a foot, so it gets to about 5-6 miles an hour. So really it has a 5 to 60 time in under 2 seconds. This is a traditional thing that car makers do to make their time seem faster, but I just want to be as accurate as possible. Nonetheless, very cool car.
Absolutely, and publications like Motor Trend do sort of allow for this rolling start in their sort of calculations. To be fair to Tesla, but of course it is extremely quick. I think the way that Musk put it last night was that it will do a number on your limbic system, which was a nice line. It is sort of for Tesla kind of a niche within a niche, just to use Musk's own words. A couple of years ago, that was how he described Model S and Model X, that they sort of make these models for sentimental reasons. But really, to the point that he made in that clip that we just played, this is really about sort of offering evidence that electric cars really can deliver extremely impressive performance, and it's not a matter of sort of having to give up anything to go from a combustion engine to an electric car. You can actually get more out of it.
Can you hear the same sound, Craig, of the engine roaring? I mean, I'm not a huge car lover like Matt Miller is, but if you're going to have the best car, are you going to try and replicate actually what a Ferrari does?
I think that's one of the cool things actually about electric cars is like this sort of whir of a car that doesn't have it has very little noise, and yet you do sort of get thrown back into your seat when you hit the pedal. So it is very different from a Ferrari, and there is some sound there, but it's a totally different thing. I think people who do
it's an
own
important issue.
Electric cars do get used to it. Yeah, but there are definitely
and some
people
prefer it, Craig.
Yep.
I will say so. A lot of people. This has happened to me as well. I love the sound of an internal combustion engine, but it's kind of cool when you get that kind of performance and don't hear any sound, or you hear the whir of the electric motors. So it is a very important topic, especially if you're going to spend this kind of money. You want to have an experience that is unique. Anyway, Craig, thanks so much for joining us. Craig Crudell there runs our autos coverage here in Europe. Coming up, high conviction bets. We'll hear exclusively from John Gray, Blackstone president and COO. Next, this is Bloomberg.
What I'd say is, I don't know if it's advice or what I've learned along the way, but definitely the best thing is to be a high conviction investor. That when you dabble and just put a bunch of money here in things you don't know or understand, it tends to work out badly. But when you see something, single family housing, global logistics, the movement of everything online, and you lean into that, that's when you have the best outcomes. And to me, that's really important.
If I said to you, I have $100,000 and I want to invest it in real estate or something else, that's all I have, $100,000. Where should I put my $100,000 today?
Well, I would say in real estate, we love what we're doing in the private REIT space. I think you can invest in a good basket of public REITs as well. More generally, I think the S&P 500. I think the market's trading, even though values have moved a lot, the market's trading in the low 20s, and when you compare that to where the 10-year is at 1.6%, I think you'll do fine over a long period of time. Plus, there's a lot of exposure to fast-growing tech companies in there.
Where should I not invest my money?
You should stay away from buggy whip businesses. You should stay away from landline phone companies and some of the legacy retailers, some legacy media businesses. You want to focus on the future, and I would just say this on real estate in particular, if I had one piece of advice, where geographically, is go where the creative and technology types are. because those are the markets where there'll be the most economic activity. So the West Coast of the United States, Austin, Texas, Cambridge, Shenzhen, London, Amsterdam, Tel Aviv, Bangalore. Tech is driving so much of the growth in this global economy. Those are the most interesting places to invest.
Okay. Do people come up to you at cocktail parties? Remember what cocktail parties were when people used to get together? They ever ask you for any investment advice? And do you always say, just invest with my firm? Or what do you give people advice?
You know, people, it's funny, they often ask me residential home prices, which is not my area of expertise. And, you know, what I tend to tell people is focus on the longer term. Focus on, you know, I think the danger of the world we live in, the sort of Snapchat, TikTok, meme stock thing is dangerous. And what you want to say is this fundamentally a good business? Is it in a good sector? Is this a good piece of real estate where supply is limited, demand is favorable? And if you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
An exclusive conversation there with the Blackstone president and COO, John Gray. You can catch the full interview on the first episode of our new series, Bloomberg Wealth, with David Rubenstein, which debuts July the 6th on Bloomberg TV. Now, it's Friday. Let's look at what else we're watching today. Kailey, what's on your mind?
I'm watching UMich consumer sentiment data at 10 a.m. Eastern time, Francine, specifically the inflation expectations metric within that, because last month that rose to the highest since 2013. So I'm interested to see if those expectations on price growth go even higher today, Matt.
Kailey, I'm going to be watching the weather, and not literally the weather here locally, but globally, we have experienced drought conditions which have really hit grain production as a result, or at least partially as a result of that. You see food prices rising to the highest level in a decade as inventories shrink. So this is very important. I don't think enough people are talking about it. Francine?
Right. I'm watching the G7, so they seem to be combining their efforts, certainly to deal with Russia and China, but also to get more vaccinations to the developing world. That may be linked to new climate goals. And of course, it's UEFA Euro 2020. It starts tonight, and I wonder whether the G7 leaders will be watching that in Cornwall.